hello everyone, and welcome to the stream. It's a Red Monday here, unfortunately for the US, but that's okay because we have a lot to talk about today, and of course, a lot of huge information coming out this week. For anyone that doesn't know or has been living under a rock, it's earnings week, and when I mean earnings, it's big earnings. There'll be a special video coming out on the channel tomorrow. That is basically the end of Monday, tomorrow for me here in Australia. So Monday close, that will be going through the outlook here for Microsoft, Alphabet, Amazon, Apple, Meta, PayPal, etc. All these big tech stocks. You know, there's so much at stake this week in the US. I don't think it gets bigger than Super Earnings Week, and we're in the middle of it. So we've got Coke before the open here, Activision, and obviously some others. But really, it all starts up on Tuesday. Tuesday, Wednesday, Thursday will be massive. We've got big Exxon as well on Friday. So it's exciting, guys, but also a little bit terrifying if you're in the wrong position. And I think we all start here probably at the VIX as well. We're sitting at just under 30 here in terms of fear index coming into this morning. There are some good signs. There are some bad signs. And depending on how you feel, we're at a very interesting level on the Nasdaq as well, or very close. Good morning, good afternoon, good evening to everyone around the world. I hope you're okay and you haven't been hurt too badly by this. If you have, hope it improves for you very soon. Let's move over here to the VIX. As we said, 30. It's a pretty high reading. It can certainly get a little bit higher and go towards that 35, 38 kind of zone. This area has been, it seemed to be topping out for the fear recently. Let's move over to the Nasdaq though, because I think that's the one that we're all watching this week, mostly because of the huge earnings. So here on the Nasdaq, you'll notice we're getting very close to those lows. You know, if you're somebody and you're looking at this from a dollar cost averaging standpoint, or you have some other concept that you like, is this a support zone? Well, somewhere around here, you would think yes. But markets love doing this. Markets love moving into a support or a resistance ahead of earnings. And then depending on what the earnings has or what it does, they'll obviously push it in one direction. Now, I'm not a huge fan of trying to predict exactly what's going to go on. I mean, maybe someone here is predictive. Let's give the chat a chance. Chat, what is Microsoft going to do? Is Microsoft going to smash earnings, beat them, or miss? Let us know right now. Henry says the crash is coming. Short the market, he says. Thanks, Henry. Well, that's correct. I mean, there's a choice here that you've got to make. And if earnings doesn't live up to expectations, what's going to happen with the Nasdaq? Maybe it will fall through. It's possible earnings could even hit some people's expectations and the market could fall through. That's something that's unknown. And there's a lot of discussion that you go through with trading. And trading is about trying to find edge. And same with investment. It's trying to find edge and trying to find points in time where you can repeat that concept and then you can continuously repeat it over time. That's what you're really looking for. A continuous repetition of a very similar process to give you edge over a long term kind of investment trading scenario. If we break to a new weekly low, are we stuffed? The short answer, it's not looking good. What's traditionally happened when that's occurred has been pretty brutal. I mean, let's look at some of these 50s. There's the 50, yeah? Let's move to the US 500 here for a second. Here's the 50. Now, if you think about what's happened in previous sell-offs, they've been pretty brutal. They've gone down once we broke the 50 to the 200 SMA. You can see how low that is. I'll use the S&P 500 real market here just to detail it. There it is. Now, if I put this and change this to 100, so I'll do that right now for you, this becomes quite statistically likely actually to occur as well. So the 100 becomes incredibly likely. It's like, I think 80% or something. Let me have a look here. What was that? It was 85% likely that we go down if we close another week bearish. 85% likely that we hit the 100 on the S&P 500. Very interesting, yeah? That's a pretty large statistic in terms of decline. So I think there's a decent amount at stake here. Obviously, the 52% for the 200 over period. There's a decent amount at stake for these markets. Where is that? Sitting at 4,000. Is that going to be a psychological number? You would think so. If it broke through there, the next number you're not going to like. It's probably going to be around 3,600. So if you're really feeling bearish on markets, if tech goes bad this week, the stakes are fairly high. 4,000 and 3,600 become real potential here for a shorting market to go to. This one becomes statistically likely. and this one becomes better than a coin flip, likely. Interesting. So yeah, this is what kind of we're doing here in terms of the analysis, and that's what's at stake in these markets. So US 100 very, very close. Let's see what everybody said here about what is going to happen with the beat from Microsoft. So most of you say beat, beat, beat. Some say miss. Aaron says do not check the market yet, and then the Westerosa Ninja says Microsoft will beat earnings, but the SP will still go down. Well, see, that's the big problem, isn't it? It could potentially go down here, potentially, and even with a beat, it could still go down, and you could still see a flow-on effect. And look at this Nasdaq weekly. There's been no weekly close under this zone that is under 13,300. We're currently slightly underneath there. So if you're trying to get clarity in this week, for some of you, it may be actually waiting for the earnings. I know you're not going to like hearing that. We've got 520 people here. Thanks so much. Give us a thumbs up if you can. It does help us out at the beginning of the streams. But this is what you might be placed with. You're probably wanting to be nimble and fast into these earnings, and you may want to stay away from the earnings themselves unless you have risk management properties in place, because it's going to be that kind of thing. Now, could it rally today? It certainly could. What I'd be looking for more is some type of trap scenario. So right now we have a resistance here in the futures market. So you can see we've got a little bit of resistance going through this zone here in the futures market, 13,350, let's call it. We've got a couple of long leg dojis here on the 2 hour. We've had a little rejection up, and you're kind of just like rallying around this area. If you break through here, could you go on a little spurt up? Absolutely. We might go to 13.5, might even go to 13.6. It's possible. If that occurs, do you want to be nimble and fast? I would say yes. At the moment, like we've been saying, it's mostly been sell the rip. That is, any rip, any movement up has been met by sell demand. And what you're really looking for here, guys, is some kind of rejection in the mornings and being reactive to that. If you have a market open and that market open goes in a direction and then reverses, creates some kind of shooting star or bullish hammer or something around these areas of the open, then you can be pretty sure that that was some kind of reaction trade where they've taken advantage of us as traders. They've pushed it in one direction, reversed it. And if you're sitting there with cash at that point, you can have more clarity in what they're probably trying to do. So we're opening up here on, I guess, what you would call their version of support. And it makes some sense. This is fairly close. Let's move over to the US 500. The US 500, a lot of long leg dojis, clearly doesn't know what it wants to do. Is it on the low? No. Is it at the previous January 23rd, 24th kind of area? Yes. 4250, 4240 zone. Previous support over here. Not too much over here. 4150 is the next big heavy support. So I'd probably have that sitting on the charts. We can go through some stocks in a minute, but that's probably where we're looking here. Tesla's going to open at around 977, so right at the bottom of the channel. Again, is it opening at support? Theoretically, yes. For Tesla, it is. It's been support before. What happens if it breaches through that? Next stop, you would think it's about 940, 945, possibly even lower. That was just the left-hand side. So you can see what's at stake. False break through the earnings. The earnings rallied it heavily. Couldn't even hold a day up. Barely held a day. Let's have a look at this analysis. Look at that. Bang, straight back in. So the gap got instantly just completely filled. It's going to open on the support today. And if you have like a little bullish hammer or some kind of strong support signals that you like, your VWAP or whatever else is looking better, possibly there is a little buy here in the morning. We don't know necessarily it isn't. But if it breaches through, of course, at that point, you're talking more shorts, next stop, 940. You see how it makes more sense here when we look at it on a daily? Look at that resistance. What do you think? Do you think that's the more likely scenario, guys? 940, or is it going to rip off this support here this morning? So John here says, I think there'll be a relief bounce followed by downside into the close. Yeah, Certainly could be there, John. It's a very plausible scenario. A few people saying 940 most likely here for Tesla. Yeah. Well, I think you just need to pick your spots really carefully this week, everyone. So if you're in spots, if you're thinking about market conditions, I would ask you the question this: do you know, or does anyone in the world truly know what the market will do if Apple, Microsoft, Google miss or beat? So you would say in a normal, healthier market, if they beat, they're probably going to go up. As long as the left-hand side, that is the rally into that point, is not negative. Like it's just kind of slightly positive. It's not like, hugely euphoric or something like that. Do we have that much clarity there? Not really. It's not going to be easy. And anyone that's telling you it's easy is not true. I mean, how do you know that it's going to be a beat or a miss, or even how the market's going to react to that at this point? Sometimes you have the ability to make better predictions. Like if you're looking at oil stocks right now, you look at an oil stock, it's up 70% leading in on a quarter. If you're up 70 or 50% leading in on a quarter, how good does the result have to be? It's not rocket science to think that, of course, the earnings report is maybe not going to beat the expectations of the market leading into it when it's up 50, 60, 70% coming into that earnings result. There may be some decline, yeah? And that's what's key, understanding that, well, wait a second, how good a result do we need here in these oil stocks? Here with the tech stocks, we're at a key support. So it's going to be very, very tough. Pavel says, I love how they trap Tesla's price between 1K and 150 on Friday. Yeah, they love selling off this area here and putting it into this coil. You can see all of the indicators. You've got the 200. I guess that's the 200 there on the 100, I think that is. And then you've got the 50 as well. Just sitting right on that support, which is where you're opening this morning. Right there. Scott Robinson says, Tesla down, please, for a buy. Fair enough, Scott. And then Shandan says, I think Street is doing a bluff. It's all about earnings guidance and not earnings per se. That is correct. Earnings guidance is a huge part. Exactly. What happened in the earnings is still going to be important this time. Last time it was about guidance. This time it's a mixture of both, I would think. Can we also get good guidance in the future? Absolutely. Brendan says gold is hurting this morning. Yeah, gold unfortunately it kind of really got smoked when it broke through that set here. So obviously we were looking at it right around that. Well, firstly, we obviously saw it broke down through our rally, which got to that 61.8 fib, or what, $2 an ounce low. Then it sold off and it came back down to this support here. It couldn't quite get through this resistance. If it did, my God, I think it would have been totally different. But that's trading. At this point, I would have gone bullish myself. If I'd seen it, the trade was there and the reality was there. And now we're all the way back down here, sitting at 1900, going, oh, that doesn't look so good anymore. I think, yeah, you'd be pretty keen to have a lot of confidence in gold here. You do need to remember gold has rallied each time off this. And technically gold, remember guys, doesn't actually really like US 10-year rising. But this is where the silver lining is kind of coming through. It's sitting on support. It is on support. I would wait for further buying pressure before I did anything here. It's come up and it's rallied a few times. We had that rally that hit this level. It's sold off and it's sitting on the last hold before it really gets hit, if it gets underneath that level. So you got to be very, very careful here on gold. It's similar with oil. Oil's coming back down. Think about what this looks like. Can anyone see the problem with oil right now? A lot of people are bullish oil. Don't get me wrong. I get why people are bullish oil, or they were bullish oil. But when you look at this chart, does this start to present a really clear picture of a problem? Alvin says, what's the schedule on your live streams now? Yeah, we do live streams every Monday open, 1 hour before the open, Alvin. And then we do have private live streams every day. Tuesday, Wednesday, Thursday. So yeah, we always do this one here. Lower highs on oil. Exactly. Gary says like a descending triangle. Speedy McCready says lower highs and oil. Exactly. We've got a lower peak, lower peak, lower peak, or lower highs, and we're coming down, effectively creating some kind of descending triangle. Now, do we expect potential rallies here? It may happen, but it's getting to that point where if we breach through here, all of a sudden, what's that telling us? If oil declines, in some ways, it's probably telling us something about the 10-year as well, which could be good for tech. Believe me, it could be good for tech, guys. You've got US 10-year over here. This is actually not necessarily bad for tech. Let's just quickly break this down here. 2 hour. So contrary to the belief that everybody has and that everything is happening here, the US 10-year is starting to feel some form of pain. It's actually just created a little double top. Now, if the US 10-year goes down, would that be better for tech or worse for tech? I'll ask the chat. What do you think? How do you get on the private live stream? Just you can join the Discord community over at fxevolution.com. Should be on the screen, and you can jump in on the 7-day trial and check it out. It's a little bit different to this, but yeah, it's quite good. It's better for tech, most people say. Yeah, best. Yeah. So shouldn't we really be, focusing on the US 10-year quite a lot here as part of our strategy if you wish to buy tech? I know you guys love tech. I mean, I'm not here to tell you what to buy or sell. I mean, to me, you're better off staying away from technology during certain times. And I've said that during 2022. I've been hammering on about metals, commodities, energy, gold at a point there, utilities, other sectors. We've been hammering all these concepts. I know you may not want to do that. So if you thank you very much as well, Manny Nicholas, becoming a YouTube member. Appreciate it very much. Thank you, Manny. So yeah, if you're looking at this and the US 10-year starts to decline and you've got a long leg doji here and now potentially, we don't know how it's going to close, a closure low, that's going to be pretty good. It's starting to look better for tech. And if that continues and we continue to see a weakness here in the 10-year, remember the market's not convinced yet, that could be positive. So really it's something that you do need to be looking at. I'll tell you this, Warren Buffett, and people are sick of hearing it, I'm sure. Warren Buffett says do this, yeah? Everyone hates that. But one thing he does always go on about is he always says, when someone says, what indicator do you use? He says, I like looking at the US 10-year. He doesn't tell you anything else. He doesn't want to really help us, yeah? But what he does say is he says, I like looking at the US 10-year. Interesting. His rule number 1 and rule number 2 aren't going to help us. Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. But the point I'm getting at here, guys, is that the US 10-year is super important if you are a tech lover. If it goes down, that is usually a positive sign for technology. And that's something you want to be looking at. So why would you not be having this on your chart, spotting the US 10-year specifically, and also targeting in the US 2-year as well? If yields start to decline, which they haven't, remember the whole problem here is that we've got this market that just rallied. And then the US 10-years rallied with it, which is wrong town, really, because the rally was also happening in tech. And now all of a sudden it's a problem. We're coming into earnings and we've suddenly, what is this? Why are we suddenly, we've just crashed, another 10% or whatever on the Nasdaq. And we've suddenly got this US 10-year starting to show signs of weakness. It's almost counterintuitive, yeah? But at this point, it makes more sense that it might be a rally at the support. Now, of course, it all comes down to earnings, but I still think we need to be watching this. Try to get clarity through watching this if possible. Got a super chat here from Agu, $5. When inflation narrative is associated with global recession fears, commodities, energy, and semiconductors also go down. Well, that's correct. I mean, if you look at things like global recession fears that occurred in previous history points, you do get commodities generally getting smashed as well. So, yeah, I agree with you, Agu. That is correct. However, that being said, we don't know necessarily that we're going into a global recession yet, okay? I know a lot of people will say we're in a global recession. It's clear as day. it's not so easy to call that. There was a chart that someone shared, and I'll tell you, like, this is super lead. By the way, where is this? Do I have it here? Let me just load it back up, guys. 1 second. And I think it's a great concept. And I'll just reiterate it here for the chat right now. You guys got to pay attention to this. I mean, I've been around for a while doing this, and I never actually thought of it this way. And then I thought, that makes a lot of sense. So percent of US Treasury yield curves that are inverted. Now, obviously, we can't invert the 3-month with anything at the moment because the Fed's so useless and so behind everything else. But the market's often, 3% land, and the 2 years often 2.6% land. But this is a great concept. The canary is actually possibly this. Remember, it gets rid of false readings from the 2-year or the 3-month 10-year. Over 50% of yield curves being inverted is actually a real sickness, a super sickness. It's been very accurate. I'd give it a bit of a different thinking if you wanted to here. Is Dr. Copper telling us something? Well, let's have a look. Again, at the moment, it does look like a rally in the morning. Could be on the cards. We don't. And remember, it's still a market where there's a sell the rip philosophy at this stage. So Dr. Copper is not looking so good either. Dr. Copper just broke our trend line down. So here's our trend line. Dr. Copper says not so good. Now, it's still very high. I mean, some people are going to draw this up and say this is a distribution. I would not blame you for saying that at all. It's still in distribution. But this is the first time that copper started to fail here for a little while. It's actually breaking to a negative downtrend. Again, not necessarily positive for the markets. But I think what's happening here is that the Fed is so stupid, so useless in some ways that inflation has occurred. It's obviously the Fed's done nothing. They're sitting down here saying, look at us down here at 0.5. The market's gone to 3%. The 2 years gone to 2.6%. And the Fed's like, okay, now we're going to raise it 0.5. And then we're going to raise it 0.25 or something like that. By the time they do that, I wouldn't even be surprised if the 10-year starts to come down, the Fed goes up, and they meet each other in harmony around here. And that's always been my philosophy. I've talked to some pretty good bond managers, and most of them agree that the best thing that the Fed is doing here is actually allowing the market to go down. And it's like that kind of sell the rumor and buying the fact. We saw it last time. As the Fed rate hikes, statistically, the markets go up. I know that doesn't make sense to you because the markets already brutalized themselves leading into the rate hikes. Do a lot of you agree with this concept? I don't know if it's helping you. I mean, you guys can let me know if it does or doesn't, but I want to talk about it anyway today. So the markets brutalize themselves leading in. The Fed's useless and they're completely off in some other fairyland doing their own stuff. And then by the time they start to move, the market's already done all its action and kind of, destroyed itself to a degree. And this isn't to say it won't go lower here, but statistically, if you look at rate hikes and then what happens 1 month, 3 months, 6 months, 12 months after, that's actually the inflection turning point often. So the first rate hike, usually the market's unstable for 3 months. But after that second rate hike and third rate hike, the market's actually going higher, surprisingly. The Western Ninja has it here again. Westerosi Ninja. Fed is ridiculous. Just do the Volcker move, induce a recession and reset. Yeah. Well, in some ways, this is kind of helping them into that statement. Yeah. I read a couple of excerpts in February where they said that the best thing that happened for the Fed now, because they stuffed it up so much, was to actually allow the market to kind of try to dump itself, and that would in turn hurt demand. And because they didn't think it was systemic, it would be the best choice for them. There you go. Dav G saying, on yield inversion chart, note recession happens after more than 50% of the yield curves uninvert. Yeah, it's really about understanding that the inversion of the yield curves, that is 50% of the yield curves going, is the canary. You can't, it takes 14 months after that on average for the crash to happen. But just having a few inversions won't cause a full-on crash recession. You do really need to, we need to think about whether markets crash when we all think they will. The question we have to ask ourselves is how many people think there's a market crash happening right now? Let's ask the chat. We've got 900 people here. Thank you very much. Give us a thumbs up if you enjoy the video. How many of you think we're about to enter a crash? And I'm not saying you're wrong. I don't know. I don't know we're entering a crash or not. I would say we're not, like as in like a proper crash. We're not talking about 20 or 30% of the market. I'm talking about like full on meltdown mode. How many of you think we're there right now? Tom, can you check the VIX, please? The VIX is sitting around 29 at the moment. 29, okay? Too many people think. Peter Schiff, yes. Peter Schiff always think it's going to crash. I actually don't know. I don't watch his stuff. We'll crash in 2021. Okay. Not yet. No. Totally there. No. So I would say probably about 30, 40% of you probably think that there's a crash happening here. And on that's, an interesting concept. I mean, we've got 20 or 30% probably think it's here. You may be correct. I don't know. I tend to believe that usually we get a little bit more of a run. Now, it could be the first time it hasn't happened the way that I see it, but I've studied a lot of history. I feel like we've got a little bit more here. And that the reason why is because even if you think it's all going to go down, this is kind of induced by the Fed also taking away their support of the markets. Remember that. It's not like some weird systemic housing crash right now. It's the Fed saying, oh, we're pulling back, guys, because we're scared of the inflation and we want to take away some of this special euphoric bill. When the US started printing all those years ago, remember this, they can never stop. They can never, ever, ever, ever stop. That's not possible. They've started something they can never finish. They will pull back and they will bring it forward and they will pull back, but ultimately they're just stringing it out now. They can never stop it, really. They have to just keep going. Snoozer says bearish sentiment is extreme, so you need to be a bull. A few people saying crash in a few years' time. Certainly possible. John says, not yet. We're seeing volatility before. Usually there are bull runs after the yields inversion followed by recession. You're generally correct there, John. You are generally correct. It's a great comment. You guys are starting to think outside here. So this is the thing we're faced with. We generally have an inversion. We can have pullbacks and fear in the market after that point. And then before great crash, you tend to see euphoria again. Convincing everyone it's all good, we got your backs. And that's when you look for the real crash. My personal opinion. Of course, you deal with it. You make your own decisions. But that's just what I think. And that's why I like that idea of percent US Treasury yields inverting 50%. Anyway, the markets here have recovered about 0.1%, 0.2% into the open. They're sitting here just about that resistance on the little futures market. Could be a bit of a rip here in the morning. Of course, it really just comes down to being nimble and fast at the moment. We don't exactly know what's happening with these earnings yet, or even how the market wants to predict them. So far, we have IBM. That was relatively good, I believe. We have Netflix. That was terrible. But Netflix is in a competitive industry with, I think, a not very large moat. These companies, Microsoft, Alphabet, Meta, Apple, Amazon, these are the moats. Amazon's the true consumer discretionary. Like that's truly what's happening with the American spender. That is, consumerism. Meta, I don't know about that. We'll get rid of that thing. Microsoft, Alphabet, and Apple. Another one here for the American consumer, obviously for just general growth in tech and a very strong powerhouse. My favorite stock, Microsoft. Personal opinion, obviously. So yeah, these are the things that are going on here. So usually you would see a bull run. I do feel like if you can somehow cut through, there's a potential here for us as traders and investors in the markets. But a lot of this relies on the US 10-year coming back down to earth and the 2-year with it. that is that the Fed will never actually even get to these rates. That's what we've got to think about here. And you've got to have confidence and clarity in your trade decisions. If you're only trading day trades and scalps, then you don't really care. Hey, but if you're trading and investing as well at the same time, then you've got to have this confidence and clarity. And that might happen after you see a double bottom, or you see a lightning bolt, or you see some of the things, or the 10-year comes down. So 2-year, 10-year down this morning, which is technically a positive for tech. I mean, remember, these are both 2 days now. There's a little double top here on the smaller time frames in the 10-year, which again is a positive thing for tech, not a negative thing coming into earnings. Just my personal opinion. Oil kind of looks sick, frankly, which again is a positive thing for probably the economy, because high oil is not necessarily a great thing. So it's definitely declining here, lower peaks coming through. Gold's just doing its own thing on support theoretically, but it's really dumped into that zone. So you'd be pretty brave. If you like these kind of areas, remember the way you do them is usually risk management, scaling concepts. Yeah, guys, if you get into these. Let's have a look around the broad market, see what's actually happening with the price and where the market pre is. So we've got a little bit of cash coming into one hyper stock, which got bashed last week, Spotify. Moderna is up slightly. Okay, let's go to the negative side here. We've got Tesla down now at 983, up $10 from where it was, or up a few dollars from where it was. And we've got a lot of Chinese stocks doing pretty poorly here in the morning. Nucor as well. That was getting smashed. Remember, that stock went up 94%. 94%, everyone, since the last earnings. Earnings came out, couldn't live up to the expectations. Yeah, buy the rumor, sell the fact. It's what we talk about here all on the channel. And we've got to be careful into these earnings. Sometimes earnings is not necessarily your best friend if the left-hand sides come in really euphoric and everyone's like, oh, I love this, and they're frothing at the mouth to buy more. And you hear them in the elevator saying, hey, you heard about steel? I want to buy steel. That's not a good sign, guys. If they're telling you to buy steel in an elevator, that's not really a good sign, yeah? So it doesn't mean it's over, but it's certainly pulling back off that. When we scroll through here, it looks like a little bit of retail. Kind of looks like the hyper stocks are not getting bashed in the morning here as much as some people might think they may. Let's go through some of these. We've got Square down 0.51 in the pre. We've got Apple 0.46. Remember, with Apple, if it does rally here, where do we expect some potential problems? Potential problems around the 165 and that price there around 164. So remember, if it does rally, does that mean that it's an epic rally? At the moment, the mentality generally of the street has been short the rip. And I don't think the street's really prepared to, maybe they're not prepared to do anything yet or show their hand until they see some earnings come out. Then, I think after earnings, you're going to see some fireworks. When those earnings come out, there might be some serious fireworks coming through. Unless they're priced perfectly to what they want. Even Amazon, look at this. Let's say Amazon did rally. Is it going to have problems with 3,000, guys? What do you think? What's Kramer saying? I don't like what Kramer's saying. Luke, tell me now. What's he saying? BTC? I don't know what Kramer... I never watched Kramer's show. Literally everyone is insanely bearish. Well, there you go. I mean, insanely bearishness. You know what they say when they're in the streets of fire. Maybe it's time to feel it good. Look, the reality is the Nasdaq is on the support. It's on support within 100 to 150 points. So what's this? Just looking at something that's shared here. So here's an interesting one, just to share in the Discord community. Jump into the Discord community as well. You're more than welcome to get in there. So this is a share. It looks like core risk model of some kind. And then obviously you've got here the previous kind of times it went over. As someone said, it was insanely bearish. Well, certainly we've got this this concept of the bears coming back down. Remember that if we short just a little bit more, let's say we hit that 100 SMA and we hit 4,000. If you're seeing that happening, let's just say that does occur. Geez, I tell you what, lots of things will be going off for buys. Like a lot of these signals, like strong signals that are counterintuitive to what everyone's going to be thinking at the time, are going to be hitting those levels. And remember, everybody says, oh, I'm going to definitely buy it if it comes down. How many people do you know with Bitcoin? They say, oh, if Bitcoin hits 10,000, I'm buying $100,000 worth. Or, I'm buying a lot of Bitcoin. That's what they say. Well, when it hits 10,000, how many of them actually buy it? Kramer is buying Nucor. Oh, no. Whoa. That's scary. That's scary. He is not. Really? That is so funny. Oh, my God. That is so funny. Oh, nice. Matt says, J Powers entered the chat. No soft landing. And Finkin79 says, China's economy is a danger. If they keep trying with a zero COVID policy, watching that closely, you've hit the nail on the head. It's so bad. That's so bad for us right now. That is really the ultimate bad story here is that. And we said that a week ago, and that is the ultimate bad story. That's a great trigger both ways. The supply versus demand of the Fed. We're here and we've got, 24 minutes away, guys. So remember here, supply and demand. The Fed controls the demand to a degree by raising rates, and obviously the market going down helps them as well with the demand side. So this is controlled to a degree. The 2-year, the 3-month, etc. It's all controlled partially by the Fed. So we'll call this Fed controlled. The supply was sorting itself out. You can see that because shipping costs were coming down. They were already down, 25% plus. That's an advantage. That type of stuff was looking better. But here's the issue. If China do actually lock down every single one of their cities and they continuously do it, are we going to have a supply chain problem? What do you guys think? Yes or no? Denial phase Bitcoin is not happy with the Fed. Very true. VIX is predicting an up day today or tomorrow, 85% chance. What do you think about that? Yeah, I would agree. We're close on support here for the NAS, and it fell really hard. We've had 2 or 3 days of heavy selling. Statistically, that's likely to be met by buyer demand. We already have a supply problem. It will get worse. Correct, Mike? That is actually correct. So that's what will happen. It will get worse, the supply problem. So that's not good. And that's really the story. If they say, let it run. Okay, let it ride like other countries have done around the world. It's all good. We're just going to deal with it. And obviously, there are ramifications for that. But in general, if we're talking about just the market itself, the supply will improve over that, and it will help to fix us. And we actually, at that point, it's a serious bit of news. There are bits of news that are real and mean something, and there are bits of news that are just kind of useless. And most bits of news are useless, but sometimes you have a really important bit of news, and that I think is looking through. How's it going, Ben? Shout out to Ben, but he didn't get the 20, Ben. You didn't get the 20. It's only getting worse. A lot of people say here it's going to get worse, all these types of things. Yeah, well, absolutely, it could. But remember, it's mostly short term. So, I mean, I think the thing is here that we need to focus. We need to focus on what we do know. And when the earnings come out, we're going to be able to get some reality of what this market really wants to do. But do remember this. Every single short currently hits resistance, it's shorted off. If the market rallies, You got to be very, very careful around these supports into resistance. This is a serious zone here if the market does rally through this point. If the market falls further, look to the S&P 500 to find your true support, guys. That's going to be around there, that 4150. 4150 is going to be the real next level. So we're at this level here. You can see why. It hit literally the lows here of 24th of Jan. You could see why today may rally. We're on day, what is this? Day 2 of the big shorts. Yep. So day 2. Statistically, usually you go for 3, like this one, 1, 2, 3. 3 or 4 become very common. But we're on this level of support. If we breach this level of support, we move down to the next zone. And stocks that are they're kind of showing you that in price, things like Tesla, again, 975. A breach below puts us into 950, 940. So we can really target in that kind of trade for the day. Look for where you have a strong edge, everyone. That's what you're really looking for. If there's some stocks that you guys want to look at, I'm happy to do that right now. We'll check that through. At Home says, this is the crash. If there is going to be a restart, this would be the perfect environment. I just don't believe they want to. I mean, it's not in their best interest. That's the problem. They always do the same thing. They always just kind of like, create these kind of nightmare scenarios. Someone asked me before, so if the Fed has smart people and there are certain reoccurring events throughout time that you can predict, that like the 2-year, 10-year, etc., then why does this keep happening? And the answer is simple. It's politics and also short-sightedness. They're the two things. And I'm not going past that point because politics is hideous. We don't talk about that. So, but yeah, they're the reasons why these problems continue to happen, because people are short-sighted. So we've got copper breaking down. We've got DXY breaking up, which someone just mentioned then. Generally a symbol of money coming out of the market, risk off. Okay, that is usually the signal here. DXY really bullish at this point in time. You can see it's moving towards that 103 kind of level. We've got 10-year down, which is technically a good thing. And we've got day 2 of potentially a 3-day sell-off. So it's really, really tough. I think you've got to wait in some ways for some people until you get earnings to give you clarity on these markets. And that may not be for everyone, but if you're not trading that way, then you've got to be fast and nimble. Going into the earnings, there's a real potential that a stock could move 20% at the moment, like what happened to Netflix or a Facebook or something like that last time around. Let's go through some other stocks, see if there's anything here setting up. No sector really is super hot. I mean, we obviously saw jets, which is a sector that I liked, which is still holding very well, by the way. This is the travel sector. I still think the travel trade is relatively good. Travel versus something. So remember, I've always said jets versus something like VT, jets versus total index. You'll notice its outperformance here has been quite good now for pretty much a month. It's been outperforming the rest of the world, 25% from the bottom here. So this sector rotation stuff is really key to understanding markets. And comparatively, jets is doing quite well. It's been doing quite well recently. So this is a big thing. Peter probably comes up with a great one. Being reactive is a great one here. Watch for stops being taken out just below support. Yeah, fantastic. If you can see that and you can spot hunts, that is, be a reactive trader to hunts, stop loss hunts, liquidity grabs, some kind of manipulation of fear and greed, euphoria, that type of thing. If you can start to spot that as a trader, you'll be so happy, because when you see them, they're very, very good. I teach them in my mentoring. Yeah, they are a very good thing. Check out Nvidia, check out AMD. Yeah, we will. Okay, let's do some. Do Nvidia to start off with here. Nvidia really low there. And frankly, it looks pretty hard. I mean, we did a bit of a report on this one. It broke a beautiful support of 210. It came down and pressured it a lot, tried to get up, couldn't do it, and then broke our trend line. This is a trend line now that goes from March 2020 into 2021 into where we are now. So it's held up pretty well, and it kind of looks weak. I mean, I don't see much strength in Nvidia. Does anyone else like this stock? Like, I mean, I like the stock a lot, but when you think about valuations, and I'll do a report on this one and soon. The problem with Nvidia is it's really traded at a very high ratio, and anything that's traded at high ratios right now is not hot. Like, I think Nvidia was something like a 50 plus PE or something like that. It's very high. So it doesn't look good on paper. Let's have a look at AMD. AMD still looks pretty sick. It tried to recover back to that 99 area, just sold off immediately. And again, another big couple of sell-offs. The rally here could be met by sell demand. We've got 8 days till earnings. It's going to be really reactive to earnings in general of other companies before this happens. Could AMD be leading down towards the 75? At this point on the chart, oh, geez. I mean, you're right where some previous, let me just show you on the line chart here. You're right around that previous little bit of resistance that runs through the middle of these two. So you've got kind of your key resistances here, and then you've got a line that goes through the middle, which is where it is right now. So if it's going to have a little weird smidgen up, sure, but not statistically that likely. If you look at this chart, you're thinking, oh, mostly bearish. It doesn't look too good. Does that make sense? Like, I mean, I don't think you have incredible clarity here on this particular chart. Nvidia was at 80 PE once. Yeah, it was. It was very high. Was 95. Doesn't mean it's worth 95 then. Make PE great again? Yeah, that's true. Analyst upgrades equals they want you to buy to sell it off later. Yeah, that's true. Silver starting to recover from early losses. So silver would be on a very similar support to gold, I assume. Oh, not really, actually. Silver got belted, even worse. Straight through. Yeah, I'd look more to gold to give you the signal on silver. If gold recovers here, silver will recover with it. That's usually the way. So the market's all around the place here leading into the open. We've got 14 minutes till the open happens. You can see that the Nasdaq has almost recovered. The S&P 500 has been down 0.2 during this stream. It's been flat. It's been up, and then it's been down 0.2 again. Clearly, they don't even know where they want to take it. I'd be reactionary today. That is, try to find a trap in the morning. If you do, or you see a closure through a key zone, then you can obviously take those trades in that direction, would be usually what you're doing. Bitcoin at this stage looks pretty sick on the charts. Nothing here saying strong Bitcoin, unfortunately. Downward trend that we'd been holding. We saw that rally through, got broken through on the Friday. That's then led to seller pressure now for a couple of days. And the more pressing thing here for Bitcoin is BTC shorts. If you take a look at BTC shorts, which I'll bring up right now for you, it really looks quite weak. I mean, you've got an increase in the amount of larger traders the last 3 days placing short positions against Bitcoin. It's not a positive sign for Bitcoin at this stage or the crypto market as a whole. So be careful there. Continue to watch BTC shorts. And I think more is at stake in the Bitcoin market at this stage. Tom, do you think that big stocks like Nvidia care about interest rates? Not really. I don't think they care. I mean, the stock cares because it's all price based, but the actual company doesn't care too much. It's not going to cost them that much. The issue is the valuation on the company. The valuation is so high, PE wise, that they just knock it down during a inflationary period. All that fluff, all that, let's call it reality away from earnings, gets knocked out of it. And it goes back to more of a fair value. And you've got to, when you look at a stock like Nvidia, look to the past of how much can come off the top. So if you look to the past and you understand some of the times, okay, yeah, 2020, since then it's been rallying, but remember 18. So in 18, we saw a sell-off in October. That sell-off went brutal on Nvidia, and it pushed it from a $72 stock, which obviously was more at the time, all the way down to $31.50. So the valuation here dropped off heavily. And that's what the question then becomes. I'll show you guys how you can see it in a really easy way. I'm going to bring it up right now for you on the chart. Ratios. Okay. So this is why I'm always very skeptical and have been skeptical on Nvidia for this year. So this is the PE ratio of Nvidia. And a lot of people never cared about this until recently. Fair enough. But eventually, you get flogged for it. So if you notice, here's the PE values, 81, 78.77, very high levels here. You've got then your resistance effectively in PE ratios. And that was where, it hit an 18. Now, that was already a high ratio. Admittedly, we have incredible growth. And this is why everyone in Wall Street is so concerned about earnings. Because it's not just, as you said, the earnings, it's the forward. Look at this chart. It's basically going epic in terms of EPS here. Great earnings per share, incredible growth. Okay, the company must be back in growth phase. Let's value it at a really high rate. Imagine if they get 2 quarters or they say, oh, profits are down due to crypto mining or something, whatever. I don't know why. And then all of a sudden we get the profit downgrade revenue. And then that pushes it down to EPS at, 2.8 or something like that. Oh, that's not going to be good. Where could we see valuations go? Sadly enough, they could go back down here to the 20 to 25 PE, which has happened before for this stock. Don't discount it can't happen. It can happen. People would literally lose their minds if that occurred. PE for Tesla is really high. Well, because I now own a Tesla, I have to say Tesla are great. Tesla is fantastic. No, realistically, yeah. I mean, Tesla is a very similar story. You've gone from no earnings to profit. Obviously, PE ratio is only part of the story here for Tesla because it's still in early infancy of earnings per share. So a lot of people look at PS ratios instead. This is Macro Trends, by the way. It's a free website. You can use it, guys. And you can see here the sales. So this is the sales leading into, where our ratios are, the PS ratios here. And that's been steadily increasing. So look, the thing with Tesla is kind of like, I don't know, a complete anomaly in general metrics. And it does its own thing to a degree. But a lot of people would say it's well overpriced. Some people would say it's well underpriced because they see the future of technology, robots, AI robots floating around your house, all those types of things. After driving the Tesla, I would say this. Personally, after driving the Tesla, I don't believe that the automatic driving software is there. Okay? My opinion only. Don't hate on me for it. I just don't. I have one. I just don't believe it's there from what I've seen. It's good. It's better than anyone else's, but I don't know if it's there. Exponential growth is hard for humans to see. Yeah, correct. Exponential growth is your X factor. If you can figure that out in a company, you do very well. Mr. says, hey, Tom, have you looked at oil this morning? We have. We've decided oil is looking relatively weak on the larger timeframes as well. And there's a big support moving forward. That's true, BCF. Depends where you live. But you've got to think about governments also allowing it. Again, that depends on where you live. So the AD driving is pretty close, but I've seen a few people that have them, and it's getting close, but it's not there just yet. I think Elon says it's this year, next year he's going to get it done. We'll see. I don't know. Hopefully. Lunch Money says, compare DXY with the SPX. Let's do that quickly here. So S&P 500 versus DXY. It's It's a cool comparison, I guess. But it's not going to help us too much, unfortunately. So the idea here is that obviously the S&P 500 will go down versus the DXY, which will be showing itself, and you're about to make a new low on that ratio. What you're looking for here in these ratio styles is like, is there a statistical advantage if we make a new low? A lot of people here saying we're all going to see all-time highs before we see usually an epic recessionary crash. I agree with you. Usually that's what happens. You get a rally through, and whatever this ends up being, if this market goes down to 100 SMA, which seems statistically likely right now, which would be 4,000 on the US 500, or whether we go down to the 200 SMA, I do think we're going to get bounces off those areas. And we'll be there, of course, talking about it. I'll specifically be hopefully sharing with you some key insights that I've got at the time. But earnings for the US is going to be the big one. So we're 5 minutes off the market here. Let's actually zoom back in on the Nasdaq and S&P. And Gary says here, Tom, do you think ratios in this market don't work? Yeah, ratios certainly work, but you've just got to be careful about which ratio you use. So some are somebody else says this. Some are inversed proportionally, some are correct. I use Jets versus VT to show me travel trade is on. So that effectively means that worldwide travel is on, in my opinion. That was a concept that I thought COVID, or whatever you want to call it, basically was disappearing from the world of travel. And therefore I felt like that trade was comparatively on. So here's the market in the morning. You can see on the futures market, it's actually bounced off the low. It came down as low as 13.2, so nice 200 level. It's bounced off that, gone to 13.3. We were at 13.6 plus in terms of previous runs. And so far, the market has followed a fairly linear way of shorting off. It's gone peak, trough, lower peak, lower trough. Well, actually, not the Nasdaq. The S&P 500's followed it. There we go. So far we've had peak, trough, lower peak, lower trough, rally, short, rally, short, rally, short, bounces through, hits the second one. It's a big trap here, unfortunately. Short, and then we've gone through the 43.60, 43.50 area. Will we rally and short again? At the moment, it's still short the rips. This morning, you're looking for really a reactionary trap. That is, if it, let's say it rallied up, hits this 20 and creates a shooting star candle, and then you have like a follow through on that shooting star, do you think, like, if that was on an hour or something, that's probably going to start shorting? I would say the power is towards the short more than the rally. So that's the kind of philosophy here. If it does rally, you're looking for generally the short until the market says otherwise, and the market has not said otherwise here. Low, he says, is today the third day of the QQQ to sell off? Yeah, it would be day 3. That's right. And generally, the market does like to have a little bit of 3 days worth of nice selling. Really, really hurt people. That's what they like doing. There's nice 3-day sell off. Here we've got 1 day in the middle and 3 big days around it. 3 days of sell, 2 days, 1 bottom off, 3 days of sell. It would make sense. We usually have another sell-off into earnings. Remember, earnings is not really today. There is earnings today, but it's not the big one. This is the big thing. 2 minutes till the open, guys. We're about to find out what happens here. Microsoft, Alphabet, I'll do a special video on it. If you're new here to the channel, 1,100 people, thank you so much. Smash that like button if you can. We will be doing a special video on Microsoft, Alphabet, so Google, Apple, Amazon, and Meta. I'll do all the TA leading into this, and we'll go through the current earnings and what the expectations are, etc. DXY is up this morning, showing risk off. That is often a lead for some people. Statistically, it works sometimes. So yeah, I mean, it's there. Copper is down, not good. Dr. Copper, very unhappy with the markets today. It's down. The positive is US 10-year is also declining. So if this continues to decline, it could give you clarity that you might want to actually start to think about tech again, which, yeah, I'm saying that for the first time really heavily in 2022. So 2022 has been the year of non-tech, but I'm starting to see the signs of, oil getting belted around, metals getting belted around. Those trades have kind of run their course for now, it looks like. And we might have a changing of the guard on the 10-year. So here we go. 1 minute to go here, everyone. Bang. We're open. All right, let's scroll through. We'll go to the Nasdaq to see how it's reacting. So we'll move over here to the 5 minute. There we go. We'll watch that one. We'll just quickly scroll through. Are these stocks actually loaded up here? Hello. So we've got 0.27 down in Square, 0.64 on Apple. Not great start there for Apple. Pretty bad. End phase down 3. We'll go over here to the percentage changes. So Snowflake, a little bit of hyper up here early in the morning. So Snowflake's there as the hyper stock. And what other big ones have we got? A little bit of health, it looks like. Percentage down. Tesla down 2.46%. Nucor. Kramer's Nucor pick. My God. 3.25. I can't believe he's loving that after earnings. That he did not say that. If he did, then he really is inverse Kramer. Deere down 4% as well. That's a big one in agriculture stocks. So Moo not doing so good. Nvidia continues to slide 1.92, and on the percentage green, we still just have a little bit in the hypers, which have been just getting absolutely destroyed. Let's scroll through my list here. It's mostly tech, remember, and yeah, basically we have here, oil stocks getting really hit. And that's another oil stock over here, BKR down 4.92. And then you've got all of these other techs just really holding on, but the big ones going down. Look at this, Hyper's up. So Square's up, but Apple 0.96 down. Microsoft down 0.5. So all this rally must be coming from the back end right now. Scroll back over here. Looks like risk on is the general concept because they're selling off. They're rotating out, I would say. Let's bring up Coil Fin. They're clearly getting really out of metals because the S&P shouldn't be underneath the tech. Something very interesting is going to be happening here over the next month, next few weeks. I truly believe that. This is a huge rotational movement. Look at this. Energy, 4.96 down. Gold down 4. Metals down 3. When was the last time that happened? Let's look at month to date here. Look at this. Look at this switch here. We've got consumer staples, defensive, jets. Obviously, I've been talking about that. And then if you think about the sector here, utilities holding its own just barely, which we've been talking about as well. So remember, the sectors we've been crapping on about have actually held okay. The sectors that are starting to switch here, look at energy over that last month and specifically the last 5 days. Is energy it's now underperforming. So this is a clear rotation out since earnings of energy, gold, metals, and all the things that have got to do with inflation trade. So it's starting to fall over. It's very, very, very interesting. US 10 years certainly one to watch for all of us over the next month. Apple now down 1.36. Oh, the froth of the apple. You do know it's my most disliked of the outside of Meta. I hate Meta with a passion. I love Apple very much, but I always question whether it gets a little bit too much of a free ride in the market in terms of how much it's still holding up. You got to remember, if you bought this thing in the start of, what is this? Let's say we bought it in January, I don't know, 20th. It's still pretty much high, or even if we bought it, it's very close to the high still. So Apple looks like it wants to come down to 154 possibly here. Just hit the daily, it's the daily 100 or 200. I think it's the 200, yeah. So hit the daily 200, but it might want to even come down to 155. Again, hyperstock's not doing so poorly here today, guys. I'll read the chat. Let's see what everyone else is saying. Palladium down 10%. Look at that SPX. Yeah, SPX still suffering against the tech market. And in general, the hyper's doing better. Monica says, Tom, game in rotation is very strong. Rotation is key to understanding markets. If you want to know more about it, I do it in mentoring. Otherwise, learn yourself. You need to understand rotation. It's super important. It's the way you win. Arcade just went green. There you go. It did go green. Did it go green? It went green without Tesla as well. So that means the hideous stocks like Roku and stuff. You know what? I haven't even looked at Roku. Let me just let me look at this thing. Oh, I haven't seen it in like a month. Oh no. Look at it. So low. Poor Roku. What's the other one you like? Zoom. It's up 0.07 today. You know, these stocks, the way I see all of these is I'm looking for traps on them because they're very hard to pick the bottoms. Yeah. Very hard for you to pick the bottoms. So you go, US 100 now suddenly green 0.15. So yeah, they're very difficult here. And the way you need to be doing them is looking for hopefully some kind of max pain reversal, which could be happening on quite a few of them right now with the new lows. Who even has a Roku? I don't know, but people do. BAC, 3% down, new low here of Bank of America. So decent earnings, bit of rotation in, then made a new low. So good. Very bad looking chart there. Yeah, see this? All of those hypers. AMD is actually up a lot, considering 3%. Guess it's coming off the mid zone. Geez, I tell you what, that's a pretty big play. If you picked that one, you went, yes, I'm going to buy that mid zone. Very careful. Facebook up. So it's mostly all the hated PS ratio stocks that got belted last week. They're all doing okay. And the things that are going really badly, Apple in particular, Microsoft as well. Strange day. So 0.2 up here for the NAS. It's not huge. It's a little bit of movement. It's 13,350. We've seen huge rotation in general, which is what we brought up on that chart before. So that's now 5 days of the market basically dumping tech. But at the same time they're dumping tech, they're harder dumping on metals, minerals, energy. So they've got to put that money somewhere. The question is, are they about to start buying tech again at the support on the Nasdaq or at the close to support? EHN, some Netflix bounce. Netflix is a sick company, okay? And nobody really wants to hold it anymore. Is there a chance? Absolutely. Is it low? Yes. The way I play this, I spoke about it the other day during one of my private streams. This is not, you don't play this the traditional way. That is, it's not so much you want to buy this stock and go, yes, I want to fill that gap. You have to think about premium and understand how to make better money out of premium here. So yeah, you've got to be careful there. BTC rallying with the NAS, it will do that. BTC will move with risk on. So if risk on occurs, BTC will move up. If risk on fails here and the market ends up going down, BTC will move down. Ultimately, BTC is at the absolute beck and call of risk on, risk off sentiment. Echo says AMD can't rally without Nvidia. Yeah, probably. I don't really know. Okay, so some of the hyper stocks are up a little bit here today. They've been down so heavily in recent days of trade. So even a 1% up is nothing compared to, look at Shop trading it's got a split coming up and it's trading at 463. So what I'm getting at here with the max pain is, let's say we see a big rally here and the market goes higher bullish and breaks back through here, and the monthly starts to look good, and then you see rotation will occur and things start to really improve and it gets through 750 in the future. All of this along that line will be really telling you that the market's ready to really show superior gains in this market sector. That we don't know yet. At this point, looks like it's in the middle of nowhere land. Guys, very painful though. I feel bad for people that are up here at the 1600s in investment. I'm not even sure if they'll ever see their money back. It could be that long. Could be a long time. SE also near support? Possibly. Let's have a look at SE. Seems like it's crashing a little bit on me there. So SE, yeah, it's pretty close to support. So again, here I'm looking more for like some kind of max pain. So I don't mind if it actually goes bang, bang, something like that, creates a whole bunch of stop loss hunts and then reverses it. Look at semiconductors. Yeah, semiconductor index is pretty disgusting. Yeah, if you look at this, a lot of people calling this as a head and shoulders, and certainly a very nasty looking candle. The only way to go bullish and feel good about semiconductors is for the market to bull close above that wick there for me. You can really see how negative that looks overall. It's on, absolute dire times for it. So look, guys, be nimble, be quick. Don't necessarily fall into too many traps here, I would say, is the story of this week. Earnings is coming. Remember, big earnings, Microsoft Tuesday after the close. For anyone that doesn't know, this is the super week. Sometimes it's better if you're not sure or you don't have clarity on the situation to wait for that to come through and then to jump in once you know the confirmation. I'm not saying it's always like this, but certainly in a time where we've got rotation, markets at support like the Nasdaq coming into huge earnings where they're going to give guidance on the future, which is a huge deal. Markets really want to know what this guidance is going to look like. And we've got fear in the street. It can sometimes be the hardest time to trade. This is your hard-earned money. Ultimately, you need to put it in the best statistical chances that you can. And to do that, it's all about, really just saying, well, do I have to do this right now? Or can I wait? If I miss it, will I be able to find another opportunity? There's something to do. BCF says sometimes it's better to go for a dog walk. That is true. So, I feel bad for that KRL. Got no money to fall into traps. That's not good. So thank you so much, everyone. I hope you had a great weekends, and obviously I hope you have a good trading week here. Special edition of the video coming tomorrow, so I'll make sure to get that out for you. And I do hope that this earnings holds up. Look, if the market gets ballistic, I'll go live public. So if the market really gets belted this week, I'll go live public. If we break through serious supports here on the S&P, obviously I'm there for you guys, so I'll come around and we'll have a chat. But at this point, the worst case we see statistically at this stage is 4,100 SMA on the S&P if it gets underneath, then 3,600 after that. They're the two big levels other than where we're pretty much heading towards at the moment, which could be a 4150. Thanks so much. Subscribe if you want to. Give us a likes up, and thank you very much. And Dave Roberts says, Roku is a software company. Wake up, you sleepy Australian. It's not so much that it's a software company or whatever it is. I didn't like it at the peak, and I don't like its valuation. Okay, it's not. I understand what it is, and it's not worthwhile owning for a long time. I mean, if you disagree with me, why did it drop so many dollars? I mean, anyone that's been watching my stream for a while would know I've hated Roku religiously ever since I started streaming for the reason of its incredible valuation. And I really have hated on it. Now, could it reverse here? Yeah, it's probably a much more fair valuation. But, if you bought it at 471, that's not great. There are other companies in this space, and I actually think the moat or the competition is fierce. So I don't believe the moat for this company, which is what I look for investment, not trades, is that high. Now, if you're going to argue with me that Roku has a higher moat than Microsoft, be my guess. But if which one would I rather own? That all day long. Coolio. Thanks very much, guys. Have a great day. Bye for now. That's true, John. But remember, I hated it for a reason of rolling contracts. Good one, though. I like that. Thanks.